This is Justin Pulitzer. This is my weekend review for the week ending March 22nd, 2015. So this past week, as we know, we had the Fed day, and we had a lot of whippy price action in between. You could see the last couple of weeks we've been correcting a little bit. We came back down to a very important range level that I had discussed, this distribution. We sort of looked below, held at the 100 MA, failed, came back up high. Here, kind of looked above range, came back down, tested back into the 100 and into this 50, excuse me, and held still below the downtrend. And then afterward, we broke out here on some short covering, probably a little bit of fear ahead of the Fed, a little bit of pullback here, some hesitation, still holding in this distribution, kind of between this and the upper. And then the Fed took us over, and the pullback was just kind of minor. We came back, retested the kind of just above the upper distribution. Then on Friday rallied and closed fairly strong, up close to the highs of the Fed day, at least the body close, and above the 20 MA. So what do we have going on here? What are the important levels going forward, and what do I see as likely scenarios? So a couple of things to note on the chart. You could take a look at this day here. We had a bit of a look below here, fail, and then rallied up into new highs. And then really the nastiness came on this subsequent breakdown here, and when we lost this bar completely. And if you look at the high a day here, it's 211.33, and the Fed day high is 211.27. So they're kind of close. The Fed day came a little bit shy of there. Not to be too much of a stickler, but that to me, this day to me is still important, and obviously the Fed day is the most important. So going forward, what I'd like to see is if the market is to be strong and to go higher, you really need to clear the Fed day high. I always talk about significant day ranges, and the Fed is always the most important. ECB days are important, and Chinese and liquidity moves are important too, but the Fed is always the one that trumps everything. And I would say for the market to safely, for me to want to initiate new longs, I would need to see the Fed high of day taken out. So I would set that alert. I have it set just above. It's 211.28. So anything above there, I think that the market will resolve higher and probably test the old highs. And I had discussed in the last week's video that there were some levels up here of some very significant importance on a couple of different time frames. And that was the 1.618 Fibonacci extension. And that could be possibly the top of the market. It may shoot up and go through, but it's definitely levels that if you're long, you want to be looking to book some profits into. And they also roughly coincided with this sort of the up channel of the move, which comes in just a little bit higher, just shy of about 215. It depends on how many days we get up there. So somewhere between 213 and 215, you probably are going to be wanting to look to book some profits and maybe initiate right or right out types of shorts. So that's sort of what I'm thinking with this. On the contrary to the downside, if you lose this sort of pullback low of day, which also roughly coincides with this 208.97, then I think you're in for a little bit more decline, and we could possibly be looking at this 207.84 again, and what I would think is possibly a 100% retracement potentially of the Fed move, and to retest the 50-day moving average and also this breakout of this 206.42. So this level to me, this 208.97, is really important. If we start getting below there and weak, the market to me starts getting a little bit more quote-unquote suspect. It doesn't mean it's bearish, it just means that there weren't really new buyers here to accept the highs. So it's, like I said, potentially possible to come back and test the 50. It may at some point, maybe it coincides with the trend low here. This is sort of a an uptrend within an up channel. If you take a look, it's also potentially possible that if we do lose these lows here were poor, just meaning that there's not excess in the market profile. I discussed that in a dedicated video, and I'm going to post the link in the description of this video if you're curious. But if we lose these lows, I think it's I would say it's almost a certainty that we'll fill this gap here to the 201.90, the 202 area, which will probably at the time roughly coincide with the 200 MA. If I would think that would be some support. If it's lost, it's potentially possible to come down to the 107s again, which I would say would be very likely, and possibly and likely even an overshoot to the channel low. So that is something that we should always be prepared for. Everyone always likes to focus on the upside, but there is a lot of downside reality that could potentially be possible. That being said, this to me does look bullish. I do think that the likelihood here is that we would go up and test the all-time highs if we take this out and potentially get up to here. That's sort of what I'm looking for, but also always mindful of the potential other move down. So let's look at some of the other indexes and see how they're faring. IWM also has been relatively strong. It's actually the strongest. It is making new all-time highs. It just is coming into that 1.272 Fibonacci extension into 125s. That has a lot more room for the 1.618 up to 131.75, and that would also roughly coincide with the channel. However, if you notice, I've drawn this line here, this red line, which sort of is it's an unofficial regression line, if you will. You can see here was the breakout. Supported, came back in here, roughly kind of supported, although got a little squishy. Here we were below, and then the backside here has served as a lot of resistance points. Here again, this whole ride here with this liquidation break down to the 50 and to the breakout check, and now we're roughly coming back up into it. So I would say this area is, between here and a little bit higher is a cautionary area, and I would be very careful with IWM just based on that. However, it is possible, like I said, that we do break up and do get the channel high. The converse of that is obviously a retest down here to the channel low. I don't know how fast it would happen. We would probably be coming down back into that support zone of the 120.97 and this like 119.37. So we'll have to keep that on our radar. Qs. Broke the down. We could see the Fed day here. Broke the downtrend. Consolidation here also strong above the 20. And then Friday was sort of just like some chop action. I would say a lot of this weakness is probably due to Apple. I'm going to discuss that in a little while. For this to go higher, you really need to see the old high being taken of 109.42, and I didn't. Yeah, I did. That would take us up to the Nasdaq.com 2000 peak. Oops, that was not good. Which is 120.5, which I do think is probably in play if this does get taken out. It would seem to me that would be a magnet for price that longs and bulls would want to take the index to. If we do wind up coming down and being a little bit weak, there are some very important defined levels that I do think would be some decent support, and that is range from the 104.58, which was this breakout area, which here also coincided with the 50-day moving average, which held well. The 105.26 was sort of this high here, and the 106.25, which was this high here, and which was really the breakout, in my opinion. So I would think that that between there and the uptrend here would be very key support. If this low gets lost, like I said, I think we will come back down into mid-range into like somewhere between 101.75 and 100.57, which would also coincide with the 200 MA, and I do think that area would be very solid support, at least the first go round. Take a look at the VIX. This is something that always, as we get down into these levels here, lower into like the 11s and the 10s, it serves as support. You can see here, though, we made a lower low off of a lower high still, which to me still means the market is sort of bullish. I mean, not sort of, is unequivocally bullish, because lower volatility usually means higher stock prices. So as long as you see the VIX making lower highs and lower lows, it's confidence inspiring per se for the bulls. That being said, we are getting down into the lower part of the range. It's potentially possible to see some type of a throwback to trend, which in this instance, I don't know how fast it would happen, would be somewhere between 16 and probably like the 14, 15 area. So it's possible there's some type of a back off, maybe for some of the, at some of the reference highs that I had mentioned, and there is some type of a rise in volatility. In this type of an environment, I'm more of a fan of buying options than selling them. When premium gets expensive up to here, I start getting more interested in selling them. When we get to the lower part of the range, I'm more interested in buying them and playing more directionally, as opposed to for volatility crush, because obviously it is already crushed. TLT, we had this sort of island reversal couple of days off of the 2009 crash highs. Anything above this level, just so you know, is really extended in terms of TLT price action. It's sort of the deep end of the pool, and low interest rates, although with the Fed's statement and how dovish Janet Yellen was, I'm going to talk about that right after this TLT explanation, you can see that it is now starting to kind of reverse pattern and making now higher highs. So I think that this area in here should be a bit of a resistance. You have a gap fill up here to 133.32, which also coincides with an old reference high from back this way, if you will. So I would say that this area in here is going to start serving as some sort of a resistance for TLT, and you may pull back a little bit with some rates rising. If there's some type of a more sustainable market pullback, you could even rally higher and try and fill this gap up here, although like I said, I think that TLT is really expensive, and I'm more looking to be a seller of rallies than a buyer here. I know a lot of people are looking for rates to go significantly lower. I'm just sort of not in that camp chasing like at these levels. I think it's expensive. XLU bounced off of the, this is the utilities, bounced off the uptrend within the up channel, rallied back up a bit, now pulling back a bit. So we're at a key level here. Excuse me, this 44.36. Anything above there is still, I would say that the yield chase is still healthy. Anything below there, I think we're coming back down, probably to retest these lows. And if we came back down that quickly off of a lower high, I would say it's potentially possible to break lower, to come back in and really test the lower part of the channel here, closer to 39.94. That also coincides with a 61.8 Fibonacci retracement, which I think would be an absolute screaming buy. So let's discuss the Fed. So what happened with the Fed this week? The Fed basically, I don't see them in any rush to really raise interest rates at the current moment, because I think that there's structural unemployment. I think that it's a lot cheaper for companies to outsource to Asian countries. I think that the increase of technology has made inventory and supply chain management a lot more efficient, and you can do automation in factories that require less workers. And I think that the unemployment rate that the Fed is looking at and that concerns them is, I would say, sort of it's skewed. It looks better than it is in reality. I know in Chairman Bernanke's past statements and some of Yellen's that they really look at the labor participation rate, and they realize that the people who have been unemployed, they've been unemployed so long that they no longer count in the tracking, so to speak. The other things that the Fed, I think, are really watching with a I guess a hawkish kind of eye, if anything, that would change them to be more hawkish than dovish. They're watching the euro crash. The euro crashing, to me, has them in an absolute panic. They didn't outright say it, but they are concerned. You can see, though, that the euro is coming close to some support. I know a lot of people have been pressing lows, looking for parity. If you look on this longer chart, let's say 15 years, maybe monthly, you can see we are at the channel low. You can see how this channel kind of got started, and if you connect these lows here, we are basically near the lows. The euro is heavily oversold. This is kind of coming down from the top, so to speak, and probably due for some type of a throwback bounce to retest this like 118 to 120 level. Wouldn't shock me to see that something like that happen, because I do believe that the Fed is really very concerned about this, and that's why they're keeping their policy as is. The other thing I think that's really got the Fed very nervous is the crude oil chart, which is, we all know has crashed very significantly also. This has held this kind of lower trend line, as you can see, which has come up from lows. It's looked below there a couple of times, and it's tested. I do think that the risk really, if on a further decline, is the 2008 and 9 crash lows of 33.20. So it's potential that there's like another leg down here. But I know a lot of the production costs are starting to get hit around this area, so it wouldn't surprise me if this does something like shock everyone and have some type of a throwback and come back up into the 60s, or maybe even a little higher on some type of concerns. But the volume on this really doesn't start picking up until much higher, so it would not shock me to see some type of a rebound in oil if this Fed playbook kind of is playing out in the way that I see. The Fed doesn't really look at energy prices as inflationary, but I do think that they see it as deflationary. It's crazy. The things that you and I all care about, which are food and energy, the Fed doesn't seem to care about when they're in major bull mode. But when they're in crash mode, they start getting worried, because the fear for them is always deflation. Deflation for central bankers is a lot harder and scarier to fix than inflation is. Always remember that. Inflation is easy to cure. All you do is jack up interest rates. Look what it did in this market here. I mean, let me show you on the S&P 500. When you had a interest rate cycle, this is when interest rates got up to like 6%, and you had the financial crisis. Look what happened. They were able to take care of the worry there pretty quickly. So that is my take on oil. Let's take a look at some of the momentum. IBB is one that you can see has been in kind of major bull market mode for a while, and is now starting to get, I think, into the parabolic stage of that phase. I drew a trend channel from we're sort of in a channel within a channel, and now we're breaking out. You can see that this got above the high of the channel, sort of got to this top of this channel that I drew in, and then sold off a bit. I would say that this has been up multiple days into this. It's potentially possible that we go higher. We did pass way long ago. We surpassed the 1.16. Excuse me. The Fibonacci extension, the 1.618 Fibonacci extension, although it wasn't that big, it wasn't that super duper of a range. I'll show you that in just a sec, but you can see that even just still a little bit higher, we're coming into the 2.618 fib extension at 385.29. So I think that this area is for sure going to be some area to sell if you happen to be long. I don't really like chasing something that's been up this much. I'm more of a fan of like buying the channel low for right or right out type of trades than kind of trying to play for still higher after something has come up this many days. I mean, you did have some consolidation here, but I mean, if you're buying here, like let's say there was some news this day on Biogen IDEC, do you think you're the smart money? You're the one who's buying with the great trade location? The answer to that is probably no. And the chances of being sold into of the people who were the smart money who owned it before is more likely. And if you take a look at that chart, that is sort of what had happened. Actually, let me go back 1 second. I'm sorry. I had told you I'd show you the IBB on a longer time frame and where I was getting those fibs from. If you take a look at a 2-year chart on the daily, you can see this is the range I used. I came down from here and I just added it, did the multiplication. Not a multiplication, addition, the subtraction, and then the multiplication and addition that gets the Fibonacci extensions. And that's where I came up with first this one and then the higher one. So this to me looks like it's starting to get a little bit parabolic, and I would be looking, frankly, I know the consensus now is to be all bullish. I would be looking to sell some rallies here into strength. Same thing with Biogen. This is a bit of a different story because it's in clear territory, but it had this long-term consolidation, gapped up. This is probably the smarter money that knew about it. It had been in a bit of a channel. And then on Friday, it had this huge gap. It actually sold off quite a bit intraday. I think that, again, those were people who had been long for a while. Smart money sells the news, so to speak. Like, they were long already. They're not the ones who were first buying here. These are shorts covering and, chasers who are coming in late. That being said, I do think that if this has some type of a consolidation and can hold into this bar's range, that there probably is the chance of still higher, and that would maybe take you to the 2.618 and also close to the 500 round number. So to me, playing for these last few points, yeah, you might get it if you're still long, but to first be chasing here to me gets a little bit more dicey. If you're looking, and look on this volume, I mean, this is like capitulation type of volume. I mean, for me, this is a move like that is the sell. Like I said, that being said, if this can do something like form one of these type of patterns, going sideways for a while, and do some type of a slow grind, then I think that the move becomes more sustainable. But for me, I would be looking to play for some type of a pullback, maybe to the channel high and maybe even into the channel low. I know that that's not consensus, but those of you that follow me know I'm usually not consensus. I believe in buying weakness and selling strength, not chasing, for still higher with bad trade location. If you're buying up here, at least give it a couple of days, to see that the gap holds. I think there's a 3-day rule, so you still have, in my opinion, at least a couple more to go. A gentleman on the stream asked me to if you guys do a lot of favorites and retweets of mine, flattery gets you a long way with me. I'll tell you that much. So a gentleman who's been following me for a while, I don't know if he wants me to mention his name or not, so I won't, but he had asked me to discuss Jazz Pharmaceutical, so here we go. We had a bit of a breakout here. We do happen to be in a bit of a defined channel. So this is sort of coming up, in my opinion, from the bottom. I do like, though, that we are making higher lows and still higher highs. So I would say it's still a buy the dip stock. I would be more inclined to buy it. You can see the 50-day moving average here it held. There was sort of tweezer bottoms here. We are now, though, in 1, 2, 3, 4, 5. Look, this is the sixth up day, and then here we had a little bit of rest. I would let this thing cool off a little bit and maybe pull back into range before chasing. If I was still long, though, I'd probably be looking for the channel high as the sell point. If this could come up, maybe it coincides with 200. A lot of people like to sell, the round numbers. And a lot of these momentum stocks, though, of late, though, the round numbers haven't been getting hit so much. Think like Netflix, it never really made it to the 500. So you might want to look to sell on some type of pops in between here and there. So that's my take on Jazz. Apple. This one was a pretty ugly move. I had discussed that I had seen a lot of high call open interest in this at 130, and I thought that was going to be absolutely, I believe I called it kryptonite, and then I saw the next one down at 125, and I had kind of hinted, not even so subtly hinted, said on the stream that I thought we were going to come down there. And after hours, we kind of even came down. I think we missed it by a few pennies. So the question is, what now in Apple? There's a few things to note here. I had discussed a couple of times, I don't want to be too repetitive, but I had said that 128.97, really 129, was the big 1.618 Fibonacci extension. And you could see we did overshoot here a bit. We have come back down, and then since then, rallying to that area has been absolutely grim death. And we are now, in my opinion, forming a bit of a down channel within an uptrend and up channel. So think about when I discuss Tesla later also about this. I had said that I would have liked to have seen Apple for it to really have been super duper healthy, to have come back down, tested the 50-day moving average, and also retested the breakout level, which was this 119 175. Apple didn't do that. It rallied in 121s down here from what I consider a less secure base to rally. It's sort of like it didn't fully get the correction I think it would have been healthier getting, and it chose to rally ahead of time, and it did so, and it ran up into, again, those 129s, and it backed off. And we've now again closed below the 20-day moving average now for 2 days straight in a row after kind of banging into those levels. So I think that the potential for Apple to go higher, I really need to see it clear. The day it was announced that it was going to be added into the Dow Jones Industrial Average, and by the way, this was day one trading in there, and look, it didn't really get much more buyers. The high of that spike in the pre-market was 129.85. I think as long as Apple is below that level, it is still vulnerable for a move lower. If we can get above that area and get clear, I would say let's just say 130, then I would say the old all-time high is in play, and it's probably consolidated enough that it could potentially, at the time I had cited here, potentially get up higher to 140. That would be the move that I would be looking for. If you can clear 130, you probably got another 10 points in the tank. However, I'm a little bit more wary of a move lower here, and I'll show you why. If we do wind up coming back down into this level and retest the 50-day, it'll probably roughly coincide with that 121 level, but we'll be getting there off, and it probably will bounce. We haven't tested the 50, but we'll be coming down off of a lower high. See, we were up high here, now we're on a lower high, and I'm not so sure. I do think that this area will hold for some type of a bounce, but it's kind of close to this, and it would be a lower low. And my thinking on that is that this might not be as strong a support as it would have been as if we did come down here, and we may do something like overshoot and get to the 50% fib and the channel low, which is roughly around, I think at the time it will happen. I mean, Apple could get jiggy and do it real fast, and we could come down to 112, but I don't necessarily know that's going to happen. I think it might be like some type of a grind, and it could take a while, and it could be around 114 or 115, possibly higher at the time. You could also see back here the 100-day moving average with some support. I would expect it to be, again, that's around 116. It would roughly be around these lows. So I don't know, like I said, that this is going to be the same strong support as it would have been here, and we may do something like overshoot to the 100 if we lose this low and the 50. If we hold it, then I would say, and we come back again to this area, this probably won't hold it and will go higher. But I am majorly still very cautious on Apple. I think the risk, in my opinion, here is still lower. Amazon. This could set up for some type of a nice right or right out type of a short, believe it or not. It is coming back up here. I think Amazon does want to retest the old high back up here at the 408.06. So if we do wind up taking this area out, that play is that way. However, if we take out these lows, you can see these are poor lows. There's no excess. These aren't elongated tails. They're just banging down and rallying. I think if this range here is lost, this like 336, I think there's a quick right or right out play down to the 50-day moving average, wherever that may be at the time. Right now it's 352.84. And my guess is it might even still go lower there to the 50% fib, which roughly coincides with the gap, which is 337. So that is something that is on my radar for some type of a right or right out play. Either a buy over these highs for the move here, just for a day trade. It's getting close. We may do something like stall a little bit ahead of time, but also this for some type of a right or right out move lower. So that is my take on Amazon. BABA, just a choppy mess, sort of nothing to see here. I had played long here, promptly got stopped out when we lost here on these 83, 84-ish area. I think it was 84 that I used. I don't remember exactly. It came back down, now has poor lows, coming back up into this like sort of resistance area. I guess this was the low of the gap day, and it's been finding some trouble. This may do something like pull back again into the mid-range here. I don't necessarily know that it's going to break down. Wouldn't surprise me to see some type of a rally a little bit before earnings. But if we can take this area, I think the play I've been really looking for is a move up to the 50-day around $90. So I had been short some puts. I sold them this day. I wound up just taking them off as basically a slight scratch. just because I didn't love the price action on Friday. The whole market was kind of rallying and BABA was lagging. But I am looking for BABA to get back up to 90 at some point. If it loses 80, by the way, let me just go back. This to me then is all bets are off, and it's potentially possible that it could go back down to the 60s, which was the real IPO price before it was trading in the secondary market. Bidu, someone had asked me to mention that on the stream. I think that the play with this one is you could see we came back up here, we retested close to the 50. This was also the breakdown level. We came back down, we retested again. So this area is a bit of a resistance level. For me, I'm going to think of this, this is still within an up channel, so you may see something like a move back down lower, but I would be more of a buyer on this as if we could take the channel high. So look for a break, either a right or right out type of a play for a short. You could see this is a high volume node up here. There may be some responsive sellers. I always think resistance is resistance until it's not. So I would try for some type of a right or right out short on the channel high. If it breaks, flip long for a move back higher. That's simple. And we probably would come back up into this area. If we do wind up coming down a little bit lower, we have a defined channel. Low, I think if this does snap though, that there is a move down to the 191s, which is another gap to fill. It was also the earnings low of day. This never printed it in regular trading hours, but this is where we did support in the after hours. So if this does something like chop and come lower, maybe it tests the channel low down here, and then that to me would also be a buy. So I would be looking to buy here, short here. If we can clear it, flip and go long. So that to me is Bidu. Kind of simple. eBay, I had said that I was looking for this to come back down into the channel low. There was a downgrade this day, and it met nothing but buyers immediately. So, and Friday was just a little bit choppy, but we still held over the body of the prior day. So eBay, in my opinion, is still bullish as long as it's over 57.05. However, I would be looking to buy it closer to these 55s, 74 area, which is the 61.8 Fibonacci retracement, and also the channel low. However, here looks like we roughly held the 50% and came back up, so we may not get that, but I would be looking to buy eBay on some further weakness. Facebook, yes! Victory, kind of, right? It is at a new 52-week high, a new all-time high, actually. So my thesis on Facebook has been for a while that we are going to go to 100. I had drawn in a channel a while back. You could see it comes up to here, and that would roughly take us to 100. It's probably going to take a while. Maybe we even do get higher than 100. But you can see the green. We are roughly in a up channel within an up channel, oddly enough, and we've had a lot. Let me bring this back. We've had a lot of consolidation in a narrow range. So my thinking with Facebook is that it does wind up going higher. We do have a bit of a sell point coming in here at the 85.51, which is the 1.618 of sort of this range. So I'd be looking to take some profits roughly around the 85s. You could also see that this line here has been a lot of resistance in the past, so it might do something like overshoot it a little bit and get into 86s, or oddly, I don't know why on this chart it's not showing it, but on another time frame, that's really strange. I must have deleted it by mistake. But on another time frame, one of the 1.618 fib extensions takes you into 87s. So it's potentially possible we get up there. So I'd be looking to take some profits between the 85 half and like 87, mid 87s. So that's my opinion on Facebook. I would be a buyer on a pullback still. Like if it does something, we have come up from the bottom. You could see we held the 50-day here, came back up, retested it. And then I had actually discussed a day trade. This wound up being a gap and go again, same type of a situation that I had discussed happening the last time, which was here. And now we made higher highs. So anything that pulls back kind of into range, between, I would say 80 at this point, between 80 and 80, 82 was the breakout, but anywhere between 82 and 80 should hold for the stock to be healthy. If it starts losing there, I think that it's probably back into this real chop zone. I do realize that that's significantly lower dollar-wise from where we are here, but I do think the stock is going to eventually go much higher. So I am looking to be a buyer again on dips. Twitter, hard to talk Facebook without Twitter. Found resistance again at the downtrend line. You could obviously have played this right or right out short. We are getting the frequency of the touch, though, is starting to get a little bit more compressed, which to me starts feeling a little bit more bullish. So I would say you can probably be long Twitter if you could take out Friday's topping tail, which was 49.15. Anything above there, you'll probably get a retest to 50. There may or may not be some responsive sellers there. If you can clear 50, you know there is room to go a lot higher. But I do think that there will be probably still sellers if it's again before the earnings. If I had my druthers, I'd like to see Twitter kind of just consolidate and kind of bubble under. There's a term that's used a lot by my buddy Peter. Bubble under the downtrend line, and then get jiggy with it, sort of, so to speak. Build up some of that buying pressure. You can see that it's just been really in this choppy zone, and I think that's just gonna remain that way until we sort of see the earnings. So that's my take on Twitter. Gilead, I had discussed. Gilead is one I had discussed. It is in a descending, sort of a really choppy pattern. It's making sort of higher lows and lower highs. There was some news over the weekend that they may have to reduce their numbers, so the stock might open up a little weak on Monday. The 200 to me is the important hold. If it loses the 200, we're probably going to go much lower and retest like the 95 level and maybe even significantly lower. If it kind of negates the bad news and breaks the downtrend, then I think you got to be long and be looking for a move back up to 108s. So that's how I'm looking at Gilead. I'll probably be using the weakness on Monday to do something like buy put ratios. I'd probably buy like 98s and maybe sell 94s or 95s near dated. I have to see how big the gap is going to be. I'll discuss some potential trades on that on the stream, but I would be looking to kind of do I call it the chicken hawk short with Gilead. I might even just be looking, frankly, really to outright short it with shares. If you could lose this bottoming, reversing tail, I think if you lose this 98.54, you're going to come down this area pretty quickly. So I'd be looking for that for a day trade. I'd probably do it both ways, maybe with put ratios and short stock. If the stock somehow miraculously opens up tomorrow and it's bullish, then I think you're probably going to catch a lot of people who are short and the stock's going to rally. Google, just kind of choppy, came back into this resistance area, and let's get back into more of a near-dated time frame. I don't like how far out we are here on this. Just got into some resistance. I think that you can buy pullbacks in Google as long as it holds the 200-day, roughly. If you start losing that, it starts getting a little dicey. You can see this pullback here after this big breakout bar. We're kind of retesting up into there. So you really want to see this over 567.45. If you can do that, I think that probably the move is back up to the 577s and maybe this 580 area, and it would be off of a higher low, which would be bullish. If it comes back down, and this was the play I'm thinking about doing, is some type of put ratios with the lower part of the or I should say this uptrend, and also which would coincide with this breakout area, the 545s. But we did hold here of the 553s, so Google should quote unquote go higher. So that's my take on Google. I think that it's a little bit choppy right now. I'd probably be waiting a little bit. It's also getting close to earnings. I'll probably not be trading Google so much and waiting for it to play it for earnings. So that is Google. Price line held roughly held the 200. It came a bit lower and now rallied up. I would be using this pullback. You can see this breakout bar. I would use this pullback kind of range as the stop if you're long. Anything below 1165 to me gets dicey because that was a hold on a pullback from this that was of the 200. Anything below there, I think we're coming much lower, probably down to the 61.8 fib, possibly the 50, and then maybe the 61.8. If we can take this high of day, then I think the stock will probably want to retest up back into this earnings area and maybe make a move back for the downtrend line. So that is how I'm saying. That's how I'm seeing price line. If you're long, stay long as you can hold over this bar. Anything below there, GTFO, which means get the F out. I really would, like I had discussed, I would have liked the same thing with all these momentum stocks. I think they're shorts at resistance until they're not. So I would be looking for some type of a row type of a play intraday here, just because we'd be coming up. We kind of filled in most of this earnings gap. We'd be coming back up to it rather quickly. I'd be looking intraday for some type of a rollback. But if this breached and we went, and if we could take it and go high, I would think we would go significantly higher, probably up to these highs here of the 1329. So that's my thinking on Priceline. Hope it was helpful. Tesla, again, this is one I had. This is an example of a stock that didn't really do what it was supposed to do as far as the correction. This thing, you could see, came down here on the earnings, and then it rallied back up, and you can see it's done. It held here. It held the down. It rallied on the down channel. Here it rallied a little bit early. It didn't want to come back down, and rallied back up. And it's really not done the more of a serious type of a correction. So at this point now, if you're long, 185 is your must hold. Anything below this range, the stock is going to probably go significantly lower and probably go to the downtrend line, which is currently in the 150s. For me, what I'd really be looking for is some type of a shock and awe move that would catch everyone off guard, and for Tesla to break the downtrend. And I would be a buyer on the break of the downtrend. It's been, in this protracted decline. The stochastics are at the lows. Any type of a move back over the downtrend, I think that it's kind of going to be off to the races, and we'll probably have a move back up into the to the more significant down, I guess, volume distribution up here, which would coincide. The first stop would be up in the 220s. You can see that's where one of these volume distributions are, and there might be even enough Momo to get it up into the 230s. So that is my thinking with Tesla. I would be a buyer more on the break of the downtrend, not so much intra range here, or a buy back down on the channel low. So that is my weekend update. If you liked it, please hit the thumbs up. I'm sorry that the video took a little longer than usual. There was just a lot to cover, and I wanted to be thorough. So be sure to follow me on Twitter. My handle is @JustinPulitzer, and cheers.